Welcome, ladies and gentlemen, to Commodity TV in a new edition of our online interview series. We want to get an update from Uranium Energy Corporation, and I would say one of our real favorite companies in the uranium space. You know that since many years, the company has again delivered phenomenal, and our first price targets, which were up to $14.50, were now reached. And we want to talk to Scott Melbye, the Executive Vice President. Before we start, of course, a disclosure. This program is produced and on behalf of and paid for Uranium Energy Corporation. So, Scott, great to see you. Fantastic. Thanks for taking the time. You are the real expert in the uranium space. You are a legend to me. And I really look forward now to talk about Uranium Energy Corporation because you guys did really well, I would say.
Well, thank you, Jan. It's always a pleasure to sit down with you and your viewers and talk about UEC and the uranium market. It's really been an incredible time. I think I'm now been with Amir at UEC for 11 years, and I have to say, the last 5 or 6 years with the billion-dollar investments to build out our uranium portfolio in North America has really been excited. We permitted, licensed, we got everything prepped and ready for the uranium market recovery. And now we're in this uranium market recovery. And in some cases, it's exceeding my own optimistic expectations. So to be transitioning like we did last reporting period into production in Wyoming and be moving to startup production in Texas next month really is exciting professionally. And I think very pleased for our shareholders that have believed in this story and have been along for this journey. We now kind of embark on the next stage for our company, which is operations and production and uranium sales at from a very attractive mines in the United States and eventually in Canada. You mentioned another big development was the decision to move downstream into the uranium refining and conversion. We just, I don't think I've had a meeting in recent years, whether it's on Capitol Hill with the Trump administration, with utilities or the financial community, where we don't talk about the tightness in the nuclear fuel cycle. And everyone, has kind of pointed to, how are we if we're going to double, triple, or quadruple nuclear power in the coming years, we need to double, triple, quadruple uranium conversion enrichment. And, we're obviously doing good things on uranium. We now have 12 million pounds of licensed capacity in the United States. We see companies in the US and Europe doing very good things on the enrichment side, whether it's Urenco or General Matter, Centrus, Orano or others. But we saw just crickets in the conversion space, and it's such a critical step. We can't advance, all these enrichment initiatives in the United States and fuel all these new plants if we don't have that step between uranium concentrates and enrichment. So we worked with Fluor over a year and a half ago to develop a preliminary engineering and design plan for a 10,000-ton conversion facility to be built in the United States. We made that announcement, and the response has been overwhelmingly positive from the U.S. government, from utilities, from the investment community. So we're very much engaged in the next steps of that process.
Super. No, I mean, those are a lot of things I wanted to touch on in the anyhow. So you gave a great summary already. But the thing is, you raised, I think, $230 million altogether. Would that be enough to really build this new refining and conversion corporation?
No, it's not the total capital cost of the plant, but what it represents. And with our partners, Goldman Sachs raised that $230 million really in advance of our meetings in Washington with the Trump administration to really demonstrate that we're serious about this. We have great financial partners, and so that will allow us to move the project forward. The next step being a more a definitive feasibility study, which will publicly express all the various costs, capital costs, time frame with the conclusion of that study. But we're also very engaged now on siting alternatives. We're looking at a number of host sites and speaking to the governors and economic development teams from a number of states, actually looking at some offering incentives for us to locate in their state. Obviously, looking at road, rail, ports, workforce, all the things that you would normally do, but also looking for strategic synergies with other fuel cycle
Mhm,
facilities in the U.S. But it's a really exciting time to become, really a national champion on the front end of the fuel cycle in the United States.
mhm.
Canada has Cameco, uh, the French have Orano. We want to be that uranium producer, vertically integrated right through to UF6 conversion in the United States.
Mhm. Okay, super. Time-wise, when do you think the first refining and conversion will happen there? What's your feeling? Or how
Yeah,
long
that
does
will
it
come
take
out
to really build
in the
the thing and
definitive
run it?
feasibility. But I think if you we were asked this question by the Secretary of Energy, if we did this the way things have been done in the past, it might be an 8-year process to get a plant like this built and online.
Mhm,
Um, Secretary of Energy felt that was unacceptable, and we agree. And so that's part of what we're talking about now is are there advantages that the U.S. government, through emergency powers or permitting and
mhm.
licensing reform, or even siting on federal lands that would allow us to build this earlier? I mean, the desire would be to have a plant up and running by the end of this decade. That would be an acceptable time frame, but we'll have to see how all these discussions pan out.
Okay, super. You touched already on production. So how is your production going now? Because I think you are since January in the production with Hobson. And how are things going there? How many, yeah, pounds you will produce by the year end? What's the plan for next year?
Yeah, so actually, in production at Irrigary Christensen Ranch in Wyoming,
Irrigation. Sorry, that was
and our cutoff for the year end was July 31st. We had real strong results, even though it was the very beginning of the production. The 130,000 pounds produced through July 31st came in at a very attractive all-in cost at just over $36 a pound. And I know we had guided, on this channel, we've talked about, $40 as being kind of the target for all-in sustaining cost, the average between Texas and Wyoming. So to come in below that for the drummed yellow cake that we produced is very attractive. Now, what that doesn't reflect is over the last 18, 24 months, we've been engaged in extensive well field construction, header houses that are now producing. Those are now in production, and those production results, will be reflected in upcoming reporting periods. We did take the opportunity after that initial run to perform some real upgrades to the very back end of the process, the thickener and the calciner.
Mhm,
We basically gave it a full. Obviously, it performed very well to produce at 36 and change, but we want to have that running at such a high performance level that as we restart the back end of that process, we're drying and drumming in a 24-hour two shift basis, and really excited to be entering that phase. But the production levels are extremely well out in the well fields, and they're feeding the plant with loaded resins. And I would say we have a good deal of in process inventory in the plant right now. So
mhm.
that's great. And then we're building in two states at the same time. Burke Hollow, everything's been constructed, pipes, valves, pumps, everything's pressure tested, and we're ready to start injecting sodium bicarbonate into the system and begin production by the end of the year. And that's the newest ISR mine in the United States, and we're really excited to have that satellite then shipping loaded resins to Hobson early in the new year. So exciting times.
Wow, fantastic. Then we have also Sweetwater. That's another thing. And when
Yeah.
we that you have yeah, of course, the largest production profile of all of them in the US with over 12 million pounds per year licensed capacity. Now you're at 130,000 pounds. You probably will go to, let's say, 500,000 by the end of next year, hopefully. When do you think you can achieve those 12 million pounds? Because to my understanding is it's getting critical over the
Mhm.
next 4 or 5 years. The market is in a deficit, 50 million pounds easily. You need more and more. There are more and more, let's say, also SMRs built, but also large nuclear power plants are built and come online. And the old ones will not destroy it. They move
Yep.
now from 40 to 60 years to 80 years
Yep.
runtime. So the feeling is your production will be desperately needed. So
Yeah,
when
it's
we
really
see,
true, Jan. I mean, this new mine production and additional production that producers are putting online around the world, it's desperately needed now. I mean, we're doubling nuclear generation by 2045, according to the WNA. And that's really before taking into account a lot of this new growth and additional additive growth from SMRs and advanced reactors. So, um, the Trump administration in the United States has recognized that and doing a number of things to incentivize the building of reactors more quickly, both large and small reactors, but also working with the fuel cycle, the industrial base, to revitalize uranium conversion enrichment in the United States. And one thing we've seen is the White House and Department of Interior and the Permitting Council invoking these Fast 41 permitting transparency dashboards. That's a long description for basically saying no longer are they going to allow the federal government agencies to slow down or obstruct production of
Mhm,
critical minerals in the United States. And so our project at Sweetwater was put on this list. It's already permitted and licensed for 4 million pounds of conventional mining per year, but we
mhm,
want to modify the plant to allow it to accept loaded resins from our ISR deposits in the vicinity of that mill. We were told under the old system that would be a normal NEPA environmental impact statement, another 6-year process. That the Trump administration said that's unacceptable. We'll put you on an 18-month process. All the federal agencies will still review as they have before, but they will be consolidated into one review rather than subsequent, reviews, and they'll be held to an 18-month time frame. So that would mean that Sweetwater, it's possible to be in production there within 2 to 3 years, which would be our goal.
wow,
I think today we have 12 million pounds of capacity. We're not planning to produce at that full capacity at this point, targeting something closer to 5 to 6 million pounds by the end of the decade. But knowing that we have the flexibility to go higher or even lower. But I think the pricing expectations that we see in the market going forward, we've never been more bullish in that regard.
okay, super. Another big thing I would call it is the Roughrider project, but this is Canada, of course. So do you, I mean, maybe it makes no sense to talk about, but do you have a headache because of tariffs, Canada, US, to do shipments of uranium in the future to the US? Or do you say, well, we still need so much time to bring that thing into production, probably tariffs are long gone then?
Yeah, what's interesting is with all the talk of tariffs in all of the various industries, I would say uranium and nuclear energy is one of the least tariffed industries out there. So, Canadian uranium has not been subject to any of the tariffs that have been discussed at various levels. And I think that's a good thing. I mean, Canadian uranium, particularly Saskatchewan uranium, its proximity to the United States is a very positive thing for our energy and national security. Well, more energy security, national security. That uranium has to come from U.S. origin mines. But in terms of our utility demand in the U.S., it's a good thing to have Canada next door. Now, would I want to have all my supply coming from another country? No. I mean, Cameco has very diverse global markets, as does Orano, ships most of their uranium to France. So we can't be solely dependent on any other countries. And that's not President Trump's vision of energy dominance, where he wants to be energy independent
Mhm.
in the United States, not dependent on others. So Rough Rider is going to play very well into this. I believe Saskatchewan production in the next 10 years needs to at least double if it's going to meet this global demand. And Rough Rider is a project that has 90 million pounds at about 2.5% ore grade, can produce about 7 million pounds a year under the plans that we developed at a all-in sustaining cost of around $20 a pound. So that clearly is in our 2030 onward timeframe. The near term is clearly now execute, ramp up production quarter by quarter in Texas and Wyoming, start generating some very significant free cash flows, which could be fairly substantial by the end of the decade. We're completely unhedged, and with $40 costs, you could be generating, half a billion, to 750 million in free cash flow by the end of the decade, and that will be plowed back into the, at least 600 million in capital costs to build an underground mine like Roughrider in Saskatchewan. So that's the longer term 2030 onward plan. But between the US and Canada, we can be a very significant, top 10, if not approaching the top 5 producers in the world.
Yeah, absolutely. I see it the same way. That's why I'm a shareholder of your company, long-term shareholder, I would say. I mean, your stock price tripled easily in the last 12 to 18 months,
Mhm.
which is absolutely justified what you guys have achieved. But also for me, it's very interesting because you are an absolutely industry expert. Let's talk about uranium markets. I mean, demand is slowly but surely growing every year, and I don't see for the next 4 or 5 years any large mines to go into production to really even shrink the deficit. The deficit. I wouldn't say that we can delete the deficit. I think that's impossible over
Yeah.
the next 10 years probably. But how do you see the market? Why are utilities not yet buying and contracting like unbelievable? Because at $82 per pound uranium, I think this is a bargain. My feeling was all the time that we should be well above 100 already, and probably next year closer to 120, 140.
Yeah, I agree. Listen, the deficit that exists in the uranium market today is real. I don't think anyone disputes it. That's what's incredible. It's roughly 50 million pound deficit over the next 2 years. It's 1.7 billion pounds cumulatively through
Mm,
2045, and that has to show up at some point. It's undeniable. And but yet we kind of look at the uranium spot price has been stuck between 75 and 80. So I often get the question, are we missing something? And the answer is no. It really comes down to a couple of things. I know we always talk about the replacement level of contracting by utilities, but that's very
mm,
real. If the world is consuming 200 million pounds of uranium a year for the 440 reactors, they should be contracting at forward levels of about 200 million forward each year. To date, I think we're at 45 million in 2025. So utilities have been focused on uranium enrichment, conversion. I think there were some concerns about tariffs and sanctions, how that would play out, whether utilities would get waivers under the Russian ban that we have that's going into full effect at the end of 2027. And also, I think there was a great deal of legacy contracts that were signed with producers at much lower prices, either low ceiling prices or base prices, where the
mhm,
utility had upward flexibility. And so, if they could do anything possible to stay off of the spot market, they've done so. But eventually, utilities that come to the market in the next 12 months are going to find that the material offered is pretty thin between now and 2030. A lot of the big five-star producers are heavily committed through the end of the decade, and or if they do have material available, they're offering it at higher prices than what might even be published today. And if utilities don't like what they see in the long-term market, their only choice is then to come back to the spot market, and the spot market can't handle that kind of volume. On top of, we're going to have producer buying, we're going to have Sprott Physical Uranium Trust buying. I mean, their discount to NAV has shrunk and moved into a slight premium recently. That's an indication that the investment market, voting with their dollars, feels that the uranium price is strengthening. And that's also allowed Sprott to raise capital to buy more pounds to put into the warehouse. So we're very bullish. I think you have to be patient that this is a coiled spring. Utilities have to surface and start contracting in meaningful levels. And you're right. There's not a lot of greenfield new mine development. The mines that have come on in the last 2 years have been, existing mines with permits, license, and even infrastructure. And that's the low-hanging fruit, and even that's been difficult. Mines in Australia, Africa, US, their restart has been challenging,
Mhm.
getting better once they kind of get up to steady state. But imagine how difficult bringing on a greenfield mine is in perhaps places of Africa or elsewhere. So, very bullish outlook. For the uranium investor, I think we're gonna see very elevated uranium prices, not for a little while, but for an extended period that will be needed to incentivize the next. Capitalism works. Higher prices will bring new mines into production, but they won't come in overnight.
That's exactly the point. I mean, where do you see the price to really incentivize new production? And we both know you cannot push the button and the mine is producing. It's a 10-year, 15-year
Yeah,
workout, right?
exactly. I mean, $60, $70 was enough to incentivize the restart of brownfield mines, but that's not enough. For big mines that need maybe even billions of dollars of investment in a large conventional underground mine and mill complex, you need prices perhaps, north of 90 or 100 to justify those investments. So I think it's coming. The demand is undeniable now, and those demand signals are there. So, stay tuned. I think 2026, we'll clearly be seeing $100 uranium prices maybe sooner rather than later.
Yeah, absolutely. I see it the same way. Um, Question about the financial health of UEC. I think stuff like this is also very important. I mean, you have achieved a lot on the one hand. You still
Mhm.
need to invest some stuff to really ramp up the production. Then you have this new enrichment, I wouldn't say adventure, but enrichment plan, of course. Yeah.
Conversion
Then
plant. Yep. Mhm.
study, yeah, conversion, not enrichment, conversion. So where is UEC today financially? Do you feel comfortable what you have? And also your shareholder base, yeah, who is now still in? Who are the large shareholders?
Yeah, so very comfortable. Prior to the Goldman Sachs raise for the conversion facility, we were sitting on over 300 million in cash and liquid assets.
Mhm,
What is really remarkable is we've been building and restarting uranium mines in two states at the same time, and our capital spending on mine development has been 50 million dollars last year, and will be similar to that again this year. So this is the advantage of in situ mining. When you already have the processing plants in place, you're only building incremental satellites or even just incremental header houses and well fields. So it's been a very efficient deployment of capital there. So not concerned about that in any way. But the shareholder base has really been changing. We've now reached up to levels where I think we touched $8 billion in market cap briefly. It's brought in larger shareholders, institutions that previously would have thought, okay, this is an interesting company, but you're just too small to have in our fund or our pension fund or holdings. We now have Bank out of Norway as a 5% owner, T. Rowe Price being, I think, our largest shareholder now. So I think that the fact that we are the second most liquid uranium equity on the New York Stock Exchange, and we're now transitioning to steady state revenue, production and revenue generating. That just moves us from the developer class to in operator class, which also opens a number of doors.
mhm, absolutely. Super. Yeah, last question.
Mhm.
If I look at, let's say, the production, the ramp up is fine, that's all done. But let's say the production grows now further and further. Maybe by the end of this decade, you are well above 5, 6 million pounds a year, as you
Right.
insisted to already. Where do you see your all-in sustaining costs going in your group of, let's call it group of mines, if you want to say it like that? What is your feeling that you can maintain from the cost side?
Yeah. Well, I mean, we still, are projecting $40 all-in sustaining cost on average between Texas and Wyoming. Of course, Texas production is a little bit cheaper, being in a warm weather environment. We don't have to enclose and heat the satellite and even the central plant. Um, uh, but as we move into Saskatchewan, it's a higher capital investment to bring that mine on, but it's projected to generate costs and in around $20 all-in sustaining costs. So that's putting us in the first or second quartile globally, which in any commodity you want to be in the lower half of global production cost, and we're certainly there. So right now it's just execute and quarter over quarter keep increasing that production, and moving towards those goals by the end of the decade.
Super. Then I can only say good success to all of that. As I know you always it's a big work program, but you guys did what you say. That's super important. This is why your share price is also really moving. And I think also with Goldman Sachs as a strong partner, you are now going also on the conversion side. You are producing U308. I mean, couldn't be better. You are feeding the whole value chain, I would call it.
Yep.
And so from that perspective, you have the right shareholder base. Everything is in good shape. I would say, Scott, thank you very much. All the best for you, and please keep it going because especially the US really needs your uranium produced in the US for the US. This is what I really like. Thank you very much.
Thank you.
Thank you. Yeah, ladies and gentlemen, that was Scott Melbye, the Executive Vice President of Uranium Energy Corporation. And as you know, Scott is really a uranium mining legend. And the guys have done everything right. Scott and Amir, really perfect job with uranium energy. Everybody made a lot of money, I would call it. And even if you go back some 5, 6 years ago, you could have the stock for like 50, 70 cents, which is really unbelievable. Today, we talk about the $13 to $15 level, which is great. But I think there's much, much more to come. This will be the largest uranium producer in the US, definitely very soon here. Give it another 2, 3 years. And the thing is done. They have a fantastic asset base, a lot. Not only a lot, but really a fantastic resource and reserve base. So that all looks really fantastic, and really make sure that you have a very, very close look on Uranium Energy Corporation. If you say, maybe a company stock, I'm not sure if I should do that, then own the Global X Uranium ETF, because UEC is under the top 5 holdings there, and so you're also fine. Yeah, so from that side, uranium is hot. Uranium shines, has started to shine, but we think over the next 2, 3, 4 years, uranium will really shine extremely bright, and I think there's a lot of money to be made. So make sure you are with it. So thanks for watching us, and bye bye from Switzerland.